Welcome to the deep dive.
Yeah.
Imagine you're piloting a really complex spacecraft.
Okay.
You absolutely need to know how much fuel you have, right? Your current trajectory, and critically, where you want to go.
Mm-hmm. Navigation and telemetry.
Exactly. That's pretty much what finance and accounting do for any business. So today, we're taking a closer look, an in-depth look, at how these two critical systems work. Think of them as the navigation and telemetry of the business world.
Yeah, and our insights today are built from excerpts from Finance and Accounting, Foundations of Business Management.
Right.
Our mission today really is to unpack that intricate relationship between finance and accounting. We want to explore what each field really entails, not just the surface stuff, and show how, together they act as the absolute backbone for effective strategic decision-making in pretty much any organization. Size doesn't matter. Industry doesn't matter.
Exactly. So think of it like this. You're getting the essential, actionable insights without having to, wade through incredibly dense textbooks.
Getting straight to the core ideas.
Yeah, getting those aha moments, but faster. Okay, let's unpack this.
Let's do it.
So let's start with the basics. We hear finance and accounting thrown around a lot, sometimes almost interchangeably.
Yeah, often.
But are they the same thing? Or are they distinct but, related, especially for understanding a company's health?
That's a really great place to start because, well, they are distinct, but they're also deeply interconnected. Finance, if you think about it broadly, is really about the management of money, investments, assets.
Correct.
It involves making those strategic decisions, trying to optimize how resources are allocated, how to maximize returns. It's fundamentally forward-looking.
Forward-looking.
Yeah.
Optimizing for the future.
Okay.
And accounting, where does that fit in?
Accounting is, it's the systematic recording, reporting, and analysis of all the financial transactions.
It's the tracking part.
Exactly. It gives you that detailed, accurate picture of a company's financial health, past and present, and that's absolutely crucial for making informed decisions.
So if I'm hearing you right, finance is the strategic, where should we put the money? And accounting is the, okay, here's exactly how we tracked it, and this is where we stand right now.
Precisely, yeah. And what's really fascinating, I think, is seeing how they actually work together, how they create this comprehensive view of an organization's whole financial landscape. One looks forward based on the picture the other provides.
Right, that synergy. Okay, let's dive a bit deeper into finance then. This is where it gets really interesting for strategy. What are the key principles that guide that world?
Well, there are three big ones that really stand out. First, risk management.
Okay.
Then valuation. And third, investment strategies. Understanding and, crucially, mitigating risk is fundamental.
Not just avoiding it, but managing it.
Exactly. Valuation is all about figuring out what assets and investments are actually worth. You need that for good decision-making, obviously.
Makes sense.
And then investment strategies focus on balancing that constant trade-off between risk and potential return, all to achieve the organization's goals.
That sounds like, a lot to juggle. What does a finance professional actually do day to day? How are they navigating all that?
Well, they have to navigate some really complex markets, right? Keep an eye on economic trends, deal with often intricate regulatory environments, all to optimize financial performance.
So it's very dynamic.
Very. It's really about making smart, forward-looking choices with the company's money. It's not just about counting it. It's about making it work effectively for the future.
Okay. So if finance is making those strategic, often future-focused money moves, what about accounting? What principles does it follow to make sure everything's clear, accurate, reliable?
Accounting is fundamentally concerned with the accurate representation of financial transactions. Full stop.
Accuracy is key.
Absolutely. And it achieves this by following a specific set of principles and standards. You've probably heard of them, things like GAAP, Generally Accepted Accounting Principles,
That you asked.
Yeah.
or IFRS, International Financial Reporting Standards, which are used more globally. These rules ensure consistency and transparency, so you can compare apples to apples.
Got it. And what does all that accuracy and consistency give us? Like, what are the actual outputs?
It gives us those crucial financial statements. The main ones are the balance sheet.
Snapshot in time.
Exactly. Assets, liabilities, equity. Then the income statement, which shows profitability over a period, revenues, expenses, and the cash flow statement. This one's really important because it tracks how cash is actually moving in and out, sometimes different from profit on paper.
Right, the actual cash movements.
Yeah. And taken together, these offer a comprehensive overview of a company's financial position. Indispensable for management inside the company, but also for external stakeholders like investors or creditors.
Okay, so we have finance making strategic plays and accounting providing the clear, reliable scorecard. Where do these two really come together and create, that synergy you mentioned?
It's probably most obvious in financial analysis. That's the key area.
Okay, how so?
Well, professionals use that financial data, the stuff provided by accounting, to really dig in. They assess performance, identify trends, maybe even make predictions about what might happen next.
So using the history to inform the future.
Precisely. And this analysis directly aids those big strategic decisions. Things like, should we invest in this new project? Should we expand operations here? Should we try to optimize this existing process? It all relies on that analysis.
And how does this whole picture connect to the bigger concept of financial management?
Financial management is really the critical discipline covering the success of the organization's money side. It encompasses planning, organizing, directing, controlling, all related to monetary resources.
So the whole shebang.
Pretty much. Budgeting, investment, financing, risk management, it's all under that umbrella. The main goal is always to optimize how funds are allocated, make sure the company can meet its obligations, and ultimately maximize shareholder wealth.
And accounting's role in that.
Accounting really emerges as the cornerstone there. It truly is the language of business, as they say. It provides that systematic way to record, analyze, and communicate the financial information that financial management needs to make sound decisions.
Without accounting, financial management is just guessing.
Essentially, yes. Or making decisions based on incomplete or inaccurate information. Accounting provides the facts.
It really sounds like accounting isn't just about, crunching numbers in a back office. It seems fundamental to everything.
Oh, absolutely. Its importance is really multifaceted.
Okay, can you break down some of those key ways it's important?
Sure. Firstly, it enables businesses to track and report their financial performance. Think about it, those financial statements. They give investors and creditors that snapshot of the company's health. Without them, good luck getting funding.
Right. Crucial for external confidence.
Exactly. Secondly, it aids hugely in budgeting and planning. You use that historical data from accounting to make realistic projections for the future and allocate resources effectively.
Can't plan without knowing where you've been.
Precisely. Thirdly, accounting facilitates compliance. Legal and regulatory requirements. Accurate reporting is often a legal must, and it protects the company's reputation.
Avoids trouble, basically.
Definitely. And finally, it plays a massive role in performance evaluation and decision-making internally. It lets businesses assess things like profitability, liquidity, can we pay our short-term bills, and solvency, are we stable long-term? All that guides strategic choices.
So profitability, liquidity, solvency. Key health indicators.
The vital signs, really.
So what does this all boil down to then? The relationship between them?
It just means that the symbiotic relationship between financial management and accounting is, well, it's undeniable. Financial management absolutely leverages accounting data for its decisions.
The data.
And accounting, in turn, relies on management principles to ensure its reporting is accurate and relevant. Together, they form this integral framework. It's essential for financial health, for compliance, and for driving strategic growth. You can't really have one without the other functioning well.
Wow. Okay. That was a really deep dive into this interconnected world. It's so clear that, they have distinct roles, but their real power definitely comes from that synergy working together to guide smart decisions.
Absolutely. And having a solid grasp of both fields, it's not just for the finance specialists or the accountants anymore. It's pretty much indispensable for anyone pursuing a career in business today.
Yeah.
It just equips you with the knowledge, the skills you need to navigate the, let's face it, complexities of the financial world.
It really highlights how, every number genuinely tells a story. And understanding how to read those stories is just fundamental to success.
Well said.
So for you, our listener, listening in right now, what really stands out to you from this discussion? What piece clicked, or what new question does it maybe spark about the financial health or the strategic decisions of an organization you know? Maybe your own workplace.
Yeah, that's a great takeaway thought.
Just think about that for a moment. How much of a recent decision was driven by that forward-looking finance perspective versus the solid ground provided by accounting? Interesting stuff to consider.